We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up LLY. We are on the 12-month time frame. Price action last candle to the right-hand side is a bullish green candle, spiked down to a low with that bullish green candle. So that price action candle is retesting the midpoint of the second last candle. The market worked its way up. Current price is sitting at 431.19. So let's figure out where the market goes, if it pushes up further, if it drops down, or if it is going to consolidate sideways. Before we get there, let's look for overall structure. So overall structure in a market like this, when you see bullish green candles pushing up, overall structure will be the lowest red and green that you can find. So that's the bottom of that low. So market tagged that low a little lower than 7.29, maybe somewhere in that area from the previous days of where we at currently. And then you want to find your highest red and green, or green and red, which would be at the numbers of 81.97. So if we took that high and low of overall structure, and I think that low could be a little lower, but don't have to be exact, it's still the same concept of being in that area. So if we take that area of that market and we look at it, we can see that the market basically consolidated, pushed up to a high and retest. So if you think about the market's doing that consolidation, within that consolidation, we can say, hey, there was a W pattern here. Okay, market retested that W, pushed up to a high, lost momentum in this area here. We received a double top. We got a retest with the bullish green candle. The market came back to retest the previous double bottom or that consolidation is coming from, and then market, and that's the midpoint of the zone. As we can see, market touched it, could have broke through it just a little bit, but still created that momentum, pushed up back up to the high of that top of that zone, just like the previous side. So if you look at the market and see what we have a double top. Market came back to retest the consolidation to the left hand side, pushed up to a high, retest the top of that zone, and then finally pushed and broke out. So if you look at the overall structure, you can just picture it. Okay, market came in consolidation, started with consolidation. You could say, hey, it was a pattern here that pushed that market up to that high, which is double bottom. Market came back to retest, pushed up again, retest, and pushed up again. So we have that first, second, third, fourth, retest, one, retest, and market's on the second push. And then we have all these areas where market broke and retest the previous candle and would push that market up. So now we have to figure out what's happening at the high area. So at that high, we know we received bullish green candles. The way you break this section down is the lowest low structure of that zone, which would be near the numbers, as I said before, of 81.97. This will be the low, okay? And then the high will be where price is currently at. So you want to grab the top of, let's say, that wick, or a little bit above price. So 433.87. And that will be the high. And what we just follow through is adding the midpoint. So let's say the midpoint is near the numbers of 255.30. Let's drop it down a little further. 249.76. Well, it's going to change that color to yellow, so we can know that we at the midpoint area if we do walk down the time frame, so we can see what's going on. So that means that when the market did break out that zone, it pushed up to an overall high as a structure, broke the midpoint. And let's say if the market comes back to retest, because all we have is bullish green candles, the last area of solid support was at the low of 81, near the numbers of 81.97. So that means that price can drop, so it spike up to a high. It can lose momentum at the high, create a pattern. Let's say it created a double top. It can come down back to the previous areas, that overall low structure within that zone area. But before tagging that, it can tag the midpoint. So the market can be identifying a break, to retest the midpoint, and then push up further if it comes down. If not, it can create stop at other levels. So we see we have a high, we have a mid, we have a lower low, which would just say that the full zone is a lower low. And within that, we have second level high. So we have a numbers at 339.59. So market can tag second level highs before even tagging the midpoint at 249.76. And I say if it breaks the number of 249.76, it can tag the midpoint within that area, and that'd be the bottom of the zone, and midpoint at 162.14. So then we go back and look at it. We have a high, we have a low, we have a midpoint, second level highs, second level lows, solid structure. So you also can add midpoints within these areas too, to make it more detailed, or in just in case the market does come back to retest. And the only reason why is because we see that each candle, or at least the last two candles that was formed, it came back to retest the previous candle. Price action came back to retest the middle of the second last candle. Second last candle came back to retest the middle of the third last candle. So in that market is identifying as a break, a retest, a push, a retest, or a break and retest, and a push again. And now we at the high. Now we got to figure out what's happening at that area, and we'll decide that as we walk down the time frame. So that market can consolidate at the top area between both SR lines, or it can drop down, create a pattern unless it receives the break of that SR line retest for that market to break up. It can push up with the bullish green candle with this candle or the following candle. On a 6-month time frame, we still have that bullish green candle spike down to a low, so we can see that market broke, retest the second last candle in that second level highs, and we received a push. Same bullish green candle. 3-month time frame, so now we can see it much more clear, with the second last candle being support of that bearish red candle spike down to a low of that second level high. So within that structure, with the fourth to last candle, the second last candle did create that pattern of that first, second, third, and we have an incline W that pushed up to the high. So that means the market can still come back to midpoint to retest. So if it comes back to retest, it can retest its own price action near that price action candle, which would be near the numbers of maybe a little lower than 392.10. Monthly time frame, now we can see the pattern much more clear. So as I said before, second level highs came off that double bottom, and now we can see it much more clear. Detail first, second, third, fourth got the break of the previous side. So this is why we having the market can have a chance to retest, to push up further, unless we see bullish green candles, because it will be retesting that double bottom that it broke out of. Working our way to the weekly time frame, same as well, bullish green candle. Second last candle is a doji, so this is a retest for consolidation. So what it's identifying is that the fourth to last candle within to that zone, that little square we just created, retest, pushed up, retest, push. So we have a break. So now we have to see if the market's going to come back to retest. So let's say if it does retest, as I said before, as we walk down these time frames, it can retest the price action midpoint, which will be 413, now 413.51. So in that area, retest and still follow up in the retest, or a push up or a push down. Price action daily time frame, bullish green candle. Second last candle is a bearish red doji. So we're going to grab that doji, place that zone around it, so we can see that what happened with that structure. We do see that market did come from a double bottom. 4-hour time frame. So market's getting a little bit choppy. So now we get to see what's happening and how that market pushed up. So the market pushed and broke out on, the market pushed out with the second last candle on 5/3/23 at 9:30 a.m. with the break, and then the price action at 9:30 a.m. is this consolidation. So we're going to see if the pattern is formed in that zone, would push that market up. We do see that pattern. So coming down in red, it was that first leg, second leg, third leg, and the market broke out and just basically consolidated sideways at that high. So we're going to see if that market's going to drop down with a bearish red candle, come back to retest the midpoint of those SR lines we created near the numbers of 413.51, and still work his way up, unless that's the retest, and it'll identify as a retest and the market just push and break out that area. Walking down to the 3, walking down to the 2, so we still in consolidation. Price second, side by side with one another. Same as well, price second, third, fourth, staying within side one another. Very important information. Please study and review Forex pattern cheat sheet, breakout and retest strategy. Okay guys, this is Cam Jones, FX, LLY, Stalk.